Good morning, everyone, and welcome to Fintech Rapid Fire with Scarlett and Dove. We are super excited. Today is our second episode, and Scarlett has invited a very special guest. And with that, I'm going to pass it over to Scarlett for introductions today. As you guys know, we ask 3 questions, 7 minutes per question, rapid fire Fintech. Let's get started.
Perfect. Well, Dove, tell them who you are first.
So I'm Dove Marmor, Chief Operating Officer of Rails Bank North America. We're a global banking as a service platform and are launching into the US with a turnkey credit card issuing platform for fintechs and brands.
Perfect. All right. Hi, all. I'm Scarlett Sieber. I'm Managing Director and Chief Strategy and Innovation Officer at CCG Catalyst Consulting. We are a leading global consulting firm that focuses on the fusion of banking and fintech. So everything that touches this ecosystem, we are involved with, super excited about it. So our guest this week, the whole idea that when Dove and I started this was to talk about really interesting things in as concise time as possible. So if it's the two of us, it's going to be 5 minutes. If we have a guest like the incredible Judith that you will be about to meet now, it will be 7. So Judith is a powerhouse in her own right, totally changing the game up. I will let her, words don't do any justice for what this woman is about to say. So Judith, go ahead and introduce yourself, and we're so happy to have you on here.
Well, you've terrified me now. I really have to live up to that. Judith Irwin, CEO of Grasshopper Bank, the first OCC-approved digital business bank in the United States.
Perfect. All right. So with that, can we please get the 7-minute clock started? First question, and I'm going to go to you first with this one, Dove. How do the digital needs of consumers versus small businesses differ, and how are they similar?
So at the end of the day, everybody needs a place to put their money, a place to spend money, and a way to track all those things. And the needs of consumers and businesses do differ in the types of reports that they need and the level of engagement that they want with their financial systems. But what's beautiful about being a platform company is I don't need to figure that piece out. The idea of a platform is we give the kind of core tools to build a finance application, which is send money, receive money, open account, manage risk. And our customers, who either service SMBs or consumers, will design what the user experience is on top of that. And that's what's so much fun about it.
Okay, Judith, this one is teed up for you. Let's talk about the needs of businesses and how they relate to consumers.
Well, it's really a couple of things. First of all, the regulatory framework for consumers versus small businesses is very different. And small businesses, while they may be only 2 or 3 people, or 10 or 20 or 30, they still mimic the requirements of very large enterprises. So the way I think about it is they may use the same tools, it's just they will use it differently. They will use it at different volume and different levels of urgency. So you need to be very deeply understand what they're crafting. I'm working on the short time frame here, Scarlett.
No, that was perfect, and we definitely are going to have a little bit of time to elaborate on that. So I will just echo a little bit of what you said, right? Because this question comes up a lot, and especially with the banking clients that we have. And really, at the end of the day, people are people. Yes, you're a small business, and there are going to be specific needs to you versus a consumer, but they are used to interacting with certain things. They have a level of expectation. When they're not running their business, they're interacting with their phone the same way as we all are. And so they want an experience that's similar to that they get on their personal lives. And I think the other side of it is, and one of the reasons why I was so excited about having Judith on here is I feel like small businesses have been underserved for a long time. And the pandemic really brought this to light for us. I have a Forbes article, which I'll put in the comments as well, that I talked a lot about this because, if you think about the ecosystem of the United States and the economy, like small businesses are the lifeblood of the US economy. And typically the community banks and credit unions are the ones, really a community banks more than anyone is the ones who served them really, really well because of that direct experience. But as we've moved over to digital, there's been some opportunities there, which is why things like what Judith is doing with Grasshopper is so crucial. So just since we have a few minutes left too, Judith, can you talk a little bit about how Grasshopper is approaching, finding the needs of small businesses and what that's been like for you so far?
Sure. Well, the biggest group of entrepreneurs are going to be entrepreneurs with less than 20 employees across the country. Their needs, however, are just as intense. Their infrastructure is much leaner. They may have limited resources and financial background to make decisions. Consumers largely use their bank to transact business. Maybe they'll buy some related products, investments, those sort of things. Businesses need that human interaction to help coach and mentor them. So what we're trying to do is deliver the traditional banking products in the middle to be there for advice, coaching. A consumer isn't going to call their bank and say, I need help finding customers or I need to raise money. So you usually go online and apply for loan. In the commercial world, it's far more complicated. Current regulations have not allowed the rule of a physical location in the United States, in order to have a business account. Well, as we know, we've all been working remotely. So what that means is unless the bank will accept a home address of the CEO, then they can't open a bank account. And the bigger banks are just not suited. So really simple things that have changed in the last year, banking regulations and banking infrastructure have a difficult time keeping up with it. So those are the areas we focus on.
And I love what you put out there. My dad is a small business owner, and he is so frustrated with the banking experience that's provided to him. It's actually, typically consumer products kind of lead the way of innovation, and obviously we've seen that come through with all the different banking as a service and investment as a service applications that are coming in for consumers now. And almost always SME is going to directly follow. But to him, it's I want 24/7 access on my smartphone. I want it to integrate seamlessly with my QuickBooks accounting system. And so it's actually less about the core account itself, in his mind at least, and is more about how easy can you make my life by integrating the bank account with all the other things that I need to deal with.
Absolutely. And that is our secret sauce that we've been working on building, is creating the ability to integrate new technologies as they become available and let go of old technologies that no longer serve the marketplace. You have to be able to iterate very quickly.
And what's been your position? Have you kind of built from scratch? Or are you leveraging kind of existing technologies to put things together faster?
Sure. In the beginning, which was 2016, Fintech was still in the early days, and there was very little that had been built for small businesses. And so we did recreate the wheel in the early days, how to open a business account online, the original front end. But happily, Fintech is catching up, and we're able to find outsourced sources for this that we can then tailor specifically the client experience to our particular client base. That will reduce our costs ultimately, because we are a bank, we're not a technology company. Mm-hmm. So developing software is not our core. It is the client experience that is our core.
So I'm going to jump in there on the client experience real quick. Judith, I think your connection, if you could, well, I'm going to actually have Dove answer the next question first. If you could just check on your connection, because it seems a little bit spotty. But okay, so we are definitely live. I see some feedback already, which is great. For all of you, as a reminder, this is Scarlett and Dove. We're doing our Fintech Rapid Fire. We have Judith Irwin, who is the CEO of Grasshopper. We are so happy to have her here, and we're talking all things SMBs, digital banking, you name it. Okay, so if you have comments or questions, please enter them throughout the conversation. I will be looking down and checking and see what we have going on, and we'll incorporate those. So you can go ahead and start the clock again for 7 minutes, please, James. That would be great. All right, so I'm gonna actually go to Dove first just because I wanna make sure we can check on Judith's connection. This is my favorite question, and when I was thinking about what to promote for this session, because Judith, there are no words that describe how credible she is, it was around this. Why on earth would someone go after a banking license directly versus partnering with the bank and utilizing theirs? Then you have what Dove is doing with Rails Bank, which is somewhere in between. So Dove, why don't you take a crack at that? I mean, with your background at Green Dot and many others, I know you have opinions on this. So let's start with you. Why would you go one way or the other? And then we'll go over to Judith.
So the beautiful part about owning a bank is that you have control, right? You have control on how you explain your business model to investors. You have control over your growth. You have control over making all the banking decisions that come with running a platform or a consumer product or anything else that exists in financial services. So really it's about control, and it's about speed, and it's about controlling your own destiny. But what a lot of people don't realize is that owning a bank or managing a bank really comes with a drastic overhead of a lot of different things that you need to do. At Green Dot, I think, we were meeting with regulators, 9 months out of the year, and in the other 3, we were prepping for those meetings. So you actually have to have tremendous scale and be servicing a lot of customers in order to overcome sort of the minimum revenue you need to break even from owning a bank. So I think there's somewhat of a tipping point where if having that control is really important to you, it does have its benefits, but most people don't realize the offsetting cost and time and management of actually going ahead and running those banks. And I think where a lot of people get burned is just, maybe picking a lot of the time the wrong bank partner initially, or kind of having some PTSD, especially when sponsor banking was in its early stages. But the market continues to innovate. Technology continues to help us streamline processes and make those things better. So the answer is there's no right answer for anyone. It really is about what you value the most at that stage in your journey and where you want to invest your capital.
Love that. So I know partly what Judith is going to say, not because we talked about this ahead of time, but because I've talked to her many times about this. So it's all about the money, money, money plus some. So Judith, what are your thoughts?
So and I hope my speed is better. I chose a different Wi-Fi connection. So there's a few things to it. One is that you need multiple streams of revenue to manage risk and manage your journey to profitability, which ultimately is where you need to end up to create a sustainable business. When you sit on another bank and don't have direct access to the regulators, you have 1 to 2 hands tied behind your back, because they're going to make all of that regulatory interaction requirements suited to the largest part of their client base. And while it is expensive, it's absolutely expensive to have direct regulatory requirements with compliance. And I actually should think about this, but a significant percentage of a bank's variable cost comes in managing those relationships. But frankly, I would rather have that relationship with the regulators and be able to, as David mentioned, control your destiny a little bit more. It also, I believe, because you can gain all the revenues from the outside of just the interest spread, deposits and loans, fee income, direct access to the whole revenue stream, not sharing it with an underlying bank. Deposits today are worth 0 to banks unless they can invest them in loans. So there's nothing to share with the underlying bank. There's far too much reliance on interchange revenue, which is certainly a lever right now, but I don't frankly believe in its long-term viability. We've already seen significant changes in Europe with the Durbin Law. There's restrictions on how big you can be as a bank. So I think it gives you maximum control, maximum accountability as well. But if you have the control over the means and the uses, then you're better able to meet those regulatory requirements, and frankly try and predict, so that you can, the old saying, go to where the puck is, not where it was.
Well said.
Perfect. So a few things I would add to that. Looking at it from two lenses. So let's look at it from the fintech lens first. As you said, Judith, a second ago, you are a bank, not a technology company, but this is where the two worlds collide in a very beautiful way. I think for the fintechs who are thinking about this, that you're seeing in the news, SoFi just acquired a bank. They're certainly not the first to do that. There are many strategies that you could take here. It comes all back to the economics. So just thinking through all those paths, there are some that make sense for some, just really depends on your strategy. For all the banks, the credit unions, the smaller players in the room, we love you. So I also want to make sure we talk to you guys. It really is central around, so thinking about on the opposite side, how can you potentially leverage your charter to enable and empower these fintechs? There are a lot of examples of that in the market. So I think you should really think through ways to potentially differentiate your revenue model. Judith talked about what, the value of deposits, and the worth is really going into lending. So how do you think about those things differently? One of the things that I love about our space is how much we focus on partnerships. I think our industry specifically has so many opportunities for overlap between all the players that touch financial services. So we actually still have a little bit less than a minute. We are doing really well with this rapid fire, better than I expected. So either of you want to add anything? Otherwise, we can definitely go to question number 3.
Good with that.
I think that's perfect.
Let's go question number 3. Can you please reset the clock, James? And there's some nice conversations happening on here, which is perfect. And we'll get to the questions at the end. Right now, people are giving us thumbs up. They're agreeing with what we're saying, but come on, we want someone to disagree with us. Challenge us. Ask us a question that you're not disagreeing with what we're saying. Okay.
Use colorful language, please. Insults are always appreciated.
No, they won't do that on LinkedIn. It's tied to their professional life, right? So, okay, the clock's going perfectly. What does good customer experience mean to you? So I'm actually going to take the first one here so we can kind of mix it up, and I'll start this off. I mentioned in the answer to the last one that it really goes back to strategy, right? For the financial service players, it depends on who your target demo is. One thing that I get a little bit frustrated by is, you started seeing for a while it was all about millennials and Gen Z, and now there's definitely a shift even to think about like the generation below that and kids, and we have to go do that. Well, let's think about this. Look at your data. Who are your core customers? What are their needs? What are their wants? Some of them may be spending a lot of time in branch still, and you have to think about what makes you unique and what makes you special. If that's where they are, meet them there. If your customers are the ones that are mobile, moving all the time, traveling all over the world, whatever else, meet them in a digital platform. There isn't a one size fits all answer. So it's really about customizing what you have to the audience that you have. And even if your audience is one, your clients, your members are one that are a bit more traditional and they like that experience of that face-to-face with that relationship, how can technology enable that and make it stronger and better moving forward? So that's my first thoughts there when I think about customer experience. Judith, what about you?
Well, so much of that is we rely heavily on client feedback. The first thing you need to do is define what's your ideal client. What can your product mix? What marketplace, what group of users will this best meet at this moment in your development? And that changes as your capability grows, as your understanding of your marketplace goes. And so, we're dealing with entrepreneurs. The most precious resource is time. And so need to be able to do their banking needs quickly, reliably, but also, no system can cover every single aspect of a client's needs. And that's where the human part comes in, is that, it's incredibly frustrating if you get caught in a loop online, or it's just simply not asking your question and you have no option to talk to anyone. There's certainly chats, but many of them are bots. So you end up going through the same routine of asking the questions as the bot narrows down your answer. You talk to a skilled human, they can answer your question immediately. You just save that entrepreneur time, as well as, frankly, reducing friction. So we try and explore all the places where friction occurs, and that's where we spend our time. Sometimes that friction is how we might internally process something due to a regulatory requirement. So we automate something that may seem to be invisible to the client, but ends up delivering a improved client experience. But a lot of it is trial and error, unfortunately, Scarlett. And you have to rely on those early adopters to be patient, to be vocal, to guide you to, banking nirvana, whatever that looks like. And doing it again in a way, I like to think of it, these small businesses as snowflakes. You heard me say that before. And so the ability to curate for each and every snowflake is ultimately our goal, so that we can scale, we can keep our costs down so that it's low cost to the business, reduce their time requirement, and we glean continued information on how to best serve our client base, even if it's not with incremental products. So that was a long answer, but that's the way I would answer it.
It works. We still got 2.5 minutes. Hey, Dove, your boss is on and he's making some comments. So
All right, I hope I answer this one well.
Okay, go for it.
So look, customer experience to me is everything. And especially in the B2B world, when we're helping people build their own branded credit cards, it's one of the most complex, frustrating experiences you could ever possibly go through. There's 20 vendor contracts, there's really complex pricing schedules, there's risk to manage, there's all these different things. And actually, I think customer experience is where we create value. So start it off by take those 1,000 steps and break it down into understandable workflows, right? Talk about how to build a product, talk about how to go through due diligence, talk about how to build your financials, talk about how to track your KPIs. These are not super complex things if you actually break them down and make them simple. And where we try to get is being TurboTax for building a credit card or Shopify for building a credit card. These companies have taken those complex infrastructures of doing your taxes and breaking it down into a very simple step-by-step process that anybody can follow. And they always have a click for help button, and you always can go and click for help, but most people don't. I've never actually clicked the button, right? Because the user experience is so fantastic and people just come out the back end saying, wow, that was so easy, right? So it really is break it down, give people checklists that they can check their work against, because everyone always has that apprehension, especially before bringing a complex financial product to market. Be open and transparent about pricing, make it simple, right? What's really frustrating in financial services is a 45-page pricing schedule and everything's sort of like metered and you have no idea what the cost is going to be to you at the end of the day, right? That's what's scary for an entrepreneur getting in. So can you actually simplify that and break it down? And then you can take that same thing that you just built for the customer, and in your example of sponsor banking, bring it back to them and say, this is actually how we manage the process so that we can build products in a consistent way that meet the regulatory requirements. And it kind of gets everyone in the ecosystem a lot more comfortable. So when folks kind of come out of our sales funnel, they go, oh my God, that was such a pleasure, right? You wanted to help us. That's fantastic. Versus a lot of the other experiences are, we're just the platform. The rest is on you. We don't. It's just a completely different way, I think, of doing business.
You landed that almost perfectly. We got 5 seconds left. So there's a few things here. Number one, for all of you, we started off a little bit late. It's all Dove's fault, and that's actually true because he was too busy, doing this whole Cornell Fintech thing. So that was not going to be the case moving forward. We'll come back at 1 p.m. Eastern. 10 a.m. Pacific moving forward. Judith, so question for you. Basically, there's a few comments here. So I'm not, one of them wasn't into a question, but they were comments kind of summarizing what you said and agreeing with you. But I want to push it a little bit further. I think people look at you. There's so much press around the things that you've done, and it's great because you're an inspiration for the next generation, right? But I would love for you, because I know you've told me this. Can you talk a little bit about how friggin' hard it was to get to where Grasshopper is now, and why you thought about doing this, and where the year when you actually started these conversations to where you are now? Because I don't think people really realize the complexity of that.
There's so many things that come to starting a bank, and it wasn't my first time, but this is post-financial crisis, and we're in a zero rate environment. When I was part of the team that started Square One, prime was, I think, 6.25. And when you start a bank in the niche that I'm in, it's a big deposit generator. When we really get the wheel revving, it's not worth very much right now. So, but let me back up a little bit. We decided to go with the OCC charter. That in and of itself is a significant decision anyone thinking about this wants to make. The the OCC license brings you a national charter. You don't have to worry about the state, local laws around lending or various things. You meet the OCC charter versus a state charter, which is led by the FDIC. Square One was state. Grasshopper is OCC national charter. The regulations are significant. It took us, rather than what we expected to be 6 months, it took us 18 months to get our charter. We were the first digital bank to get approval. I understand why that was difficult. We were the first bank focused on the venture ecosystem to get an OCC charter. And out the gate, they actually had some significant restrictions on our ability to execute on that, which were lifted last year. The fundraising, very difficult, because right now, you said this earlier, the economic upside for a bank is really limited. And the cost infrastructure due to regulatory requirements, technology is so high. You have to really believe that you can drive to that point of sustainability, profitability. For us, that's early next year. And that you've got something that can truly add value to the marketplace. We were an early adopter for a core processor coming into the United States. So we were a beta house. Colin at Varo joined us shortly thereafter. That had its own challenges. And as mentioned, some of the early technologies we've set aside already. So when you're setting out to do something for the first time, it doesn't always work. I know it's a shocker. And you have to quickly pivot to where it makes sense for you to be successful. Because if you can't, you're not meeting a real need. You're not really answering a market requirement if you're not able to, execute on that. The picture in the promo versus my appearance now tells you the toll it can take on you. But and throw COVID in on top of it. It's been a difficult journey, but I do think Grasshopper provides a long-term lasting value for banking in general, but specifically the innovation ecosystem and having another way of thinking about doing things. I've thought crazy things like, why do we even have CEOs? Does it make sense anymore? You really have to ask yourself questions about business models, your correct decisions, your wrong decisions, and you have to be really adroit and nimble, and you have to be tough-skinned. You just can't, and I say that even though I'm not necessarily known for my tough skin. You have to be a survivor. You have to be stubborn. You have to listen to people who are naysayers. Really listen, not just okay. So a lot of lessons learned, and I really do hope that on the other side of all of this, that other banks can find a path to going a different direction on behalf of their clients. And frankly, my concern is for the banking industry as a whole in the United States. Some fundamental things have to change.
Yeah, absolutely. Well, that was so many key insights there. And I think my biggest takeaway, and Dove, then I'm leaving it to you to close this puppy up. But one thing that I heard that really connected, and by the way, the reason why I keep looking away is because I'm trying to man the comments and everything else. So for all of you, I'm definitely listening to what's going on, and I'm here. I'm just trying to multitask and make sure we're giving you guys all a good show here. But my key takeaway, I think, was around really spending time on where the friction occurs. It sounds like such a simple concept, but it's actually, so many people don't do that. And that I think is absolutely crucial. So Judith, you're a queen. Thank you. Dove, let's talk. Let's tell them what's coming next time.
Wrap it up. All right, Judith. And as you were talking, I like just going back to this quote I heard on a podcast the other day that an entrepreneur has unbridled optimism with a nice dose of realistic pessimism. So I think you brought that together perfectly. So we're going to be doing this show every 2 weeks. On April 9th, we're going to have Brian Barnes, who's the CEO of M1 Finance. They just did a huge raise, $3.5 billion under management. Really excited to have him on the show, and we'll talk about a whole host of new subjects, and follow Scarlett and I's LinkedIn for updates on that event. And thank you guys all so much for being here. Really, really enjoyed this. Scarlett, anything to add?
Yes, last thing. If you have, please keep your comments coming in. This doesn't end right here. If you have questions for Judith, Dove, myself, all of us, we're on LinkedIn. You know how to find us. It's quick. It's pretty easy. And in between now and then, if there's things that you want to see, that you want to talk about, like, let's make this more of a conversation. We're just here to be the facilitators of that. Let us know about other things you want to talk about and other guests. Judith, we want to have you back definitely at some point too. So that's all from my side. Happy Friday, everyone. For those all the way in Europe, go get your cocktails. Have a good night. For us, we still got a few hours. Dove, for you, it's still morning for you. You got a whole day of work left behind you.
I'm gonna start drinking my beers in 5 minutes. So it'll be a fun Friday.
Good. All right.
Thanks, guys.
You.
Bye.
Thanks.